Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 18th of March. I hope you had a good week in the market. The S&P and Nasdaq, all these markets had really big weeks. Semiconductors up close to 10% this week, and it's kind of funny because we were down 20% in the Nasdaq on Monday intraday, and people were talking. The media told us that meant we were officially in a bear market, and from there we've seen the biggest rally of the year unfold. So it tells you how foolish those titles are in terms of bull market and bear market. We've been in a bearish environment. That's been clear from the beginning of the year. Here's where we were 50 days ago, and we've still got that 50-day moving average declining. We're above the year-to-date volume-weighted average price, so those are some positive things. However, where we are right now doesn't mean it's a good buy. We just came from 407 up to 444, so we've had this really big rally here, close to 10% off the lows, just Monday morning. So it's getting a little bit extended here. The 50-day moving average is still declining. It's not to me, it's not important whether it closes above or below it, but what's more important is the direction of the 50-day moving average. So certainly, if you're long and you're experiencing some gains in this, that's great. Alpha Trends members are long. ARCO this week from $7.50. We're involved in Bros at 52.25. We got stopped out of ATC was our final short. We got stopped out of the balance of that yesterday, and just perfectly we shorted it here. Got stopped out of the balance yesterday, and big up day today. The market does what it's supposed to do if you're listening to it. So for the S&P 500, again, we're above a rising 5-day moving average and the volume weighted average price from this low. We're above the year-to-date volume weighted average price. So the question is, does that mean we should get bullish here right now? And my thought is we've got to be very cautious because we've expended a lot of energy getting to where we are. And again, we've got a declining 50-day moving average, and here's the 200-day moving average as well. Doesn't mean it can't move higher, but the Fed said they're going to raise 6 more times, I think, this year. If we do something like this, it'd be much more, it'd be much healthier for this market to pull back, maybe even down that low, and then rebuild and continue higher from there. Until it does something like that, it just doesn't make sense to chase like this. And it's easy to get caught up in the FOMO, fear of missing out, fear that you did miss out. But again, where's the Nasdaq? The Nasdaq is right back to the volume weighted average price from the beginning of last year, and now that's tied with the 50-day moving average and the volume weighted average price from the beginning of this year. So where has it come from? Right where it was supposed to bounce, at the volume weighted average price from the COVID low. I certainly didn't expect a rally of this magnitude, but that's what we got. That's why we don't sell short, because we think it's up too much in the near term. Instead, we say, listen, it's in a primary downtrend. It's getting a bounce. Let's enjoy that bounce and see how it plays out from here. If it can hold its gains, great. Then we'll know that that was the low. I'm not ready to call anything a low, just like I wasn't ready, over here to call this a high. We'll know well after the fact. The point is we want to focus on the action of the individual names, and there still is great action in the individual names, mainly to the long side now, although some of them are getting a little bit too extended. So it's always a balancing game of, are we in a good low risk, high probability place? Now, the Russell 2000 also continued to find bounces from the volume weighted average price from the COVID low. There's nothing else there indicating, actually, there was one other thing, as we've previously mentioned, the 38.2% retracement of that entire range brought us down to right here. That's 38.2%. So again, we're getting a bounce, and we have a declining 50-day moving average. We have this big prior band of support. It has the potential to become resistance. A lot of people will say, hey, there's resistance there. We don't know. We got to go test it and see if there's in fact resistance. What we're going to start to keep a closer eye on as well is this volume weighted average price. That's from the all-time high. So that might be the level where this thing peters out next week on the upside if it gets up towards that level. And guess what? That's right in the middle of this range as well. So it would make sense for supply to be found in here that would slow this market down. Doesn't mean it has to. I mean, it might just continue to ramp higher. Nobody knows. That's the point. And what we have to do is say, are we in a low risk, high probability position for new long trades? And in these indexes, the answer to me is no. Semiconductors, like I said, up close to 10%. Where are they? Well, they've come 10% right up to the year-to-date VWAP, the declining 50-day moving average. And again, That doesn't mean they can't continue to move higher, but after expending that much energy to get here, it doesn't seem likely that it will. It doesn't mean it's a short here either. What's more likely for a short to set up is that, it would undergo some distribution. A lot of people, it's too obvious for a short up in here. So maybe it does something like this over the net, Monday, Tuesday into Wednesday of next week. Then it starts to break down and perhaps starts to find support at the rising 5-day moving average. That would be a healthy way for this thing to consolidate the gains from this week. Biotechs remain the worst, but they are right up to the year-to-date volume-weighted average price and that declining 50-day moving average. So kind of the same story there. Financial stocks right up to that 50-day moving average. Also, they had this shakeout from that failed breakdown lower, came this fast move higher. They're at a potential area of resistance. Doesn't mean it will, but we have to be aware that they could slow down in here. And, I'm not going to say that we should get short until we see something like this, until we see that 5-day moving average kind of start to flatten out, prices get trapped under it, and then to short it right in here with a stop above there. Don't short it just because you think it's up too much or because you think it's going to find resistance there. It's a potential resistance area. The energy names, they really didn't have that bad of a week considering the magnitude of the rally we've seen in here overall, but they're still in profit taking mode with a declining 5-day moving average, so they just need to settle down a little bit before they can be bought again. And that will do it for me for this video. Have a good weekend. Thanks for tuning in.